There are times to be bullish. There are times to be bearish. Being bearish really hasn't paid the bills, especially ahead of NVIDIA earnings. But we got a good technical setup to talk about if you're brave enough to be bearish. Slew of retail earnings to cover. Target, they warned us earlier in the week. Changes in the C-suite at Lululemon not going over well. BuzzFeed taking off. We'll cover that as well. 8:35, Ryan Craver to cover the retail sector. It's hump day here on Pre-Market Prep. Let's get it started.
Welcome to Benzinga's Pre-Market Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
Okay, traders and investors, we're in the red. We blame the UK inflation data for that, maybe. A little nervousness ahead of NVIDIA earnings. We'll talk about the technical setup here in a minute. Down 8.75 handles at 53.3650. The buck up about 20 cents on a little bit of a 4-day winning streak, or 3 out of 4. TLT flat at 91.50. Crude can't catch a bid, down 95 cents, 77.70. Gold taking a break too, down 12.10 to 24.1380. Silver under 32. That's down 26 cents at 31.82. Bitcoin trying to find a home in the 70K handle, up $625 at 70,125. Let's bring in Triple D and AB on the hop here, and I'll go to the SPY chart, the S&P chart, whatever you want, but don't call it a triple top unless it's a triple top. That's what you have there. If you're just dying to short the market ahead of NVIDIA earnings, 3 highs, right just under a nice round number like 53.50. The spider's shaping up that way too. But Triple D, did you have some action last night in the after hours trade?
It was quiet again. It's been quiet here, and it's probably the calm before the NVIDIA storm. We know, obviously, everybody is eyeing the big report tonight. It's all that matters here. NVDA going to report here tonight, and that's what matters. So I think the market is kind of choppy, just kind of hanging out. I mean, even if you look at the S&P, we've been 3-4 days just kind of hanging around 530 on the SPY. So not really going up, not really going down. We're looking for the next cue of which direction we're going to go. So it's all about NVIDIA tonight. We will preview NVIDIA in a few minutes here, but lots of other earnings to get to. So, I mean, it was a quiet night, though.
All right, AB, how you doing today?
I am good, y'all. Well, actually, so my the AC in my apartment went out last night, which wasn't a huge deal. I mean, it's not like super hot, but I was looking on the thermostat this morning. It got up to 78 degrees in the apartment. So no, I like to sleep when it's like cold. So I woke up in the middle of the night. Apartment was hot, and then this morning when I hop in the shower, no hot water in the shower. So I don't know what's going on, how the AC and the hot water go out in the same. I mean, maybe I got to pay some bills or something, but
I think so.
No, I don't know. So that's something I got to figure out today. Outside of that, I'm doing well. Let's hop into some earnings. You mentioned them. Retail earnings coming in. I guess let's start with Target, since that's the biggest company we had report since yesterday's show. And we've got a couple different headlines to discuss with Target. I'm just pulling up the numbers here now. But things, I mean, as good as Walmart's earnings were, Target did not live up to the bill. And we talked about how more affluent customers were shopping at Walmart. So maybe some of Target's customer base is going over to Walmart. Target sees EPS, or Target gets adjusted EPS $2.03, missed the $2.06 estimate. Sales came in at $24.53 billion. Beat the $24.52 billion estimate. Looks like the EPS guidance came in a little bit light, $1.95 to $2.35 versus the $2.19 estimate. And stock trading lower this morning, coming down. Let's see, we came down from 156 all the way down to 143, down about 7.5%.
Big move here for Target. It's done this before. It's prone to big moves, and I didn't look at what the expected move is on the stock. But last time we reported back in March, went from 155 up to like almost 170. So it was a huge move on earnings there. Big move in the opposite direction this time. Obviously, Walmart maybe set the bar a little bit higher. Walmart had the gap and go on their earnings. And now Target disappoints. The guidance not fantastic by any means. So you're getting the gap down here. I mean, there is some support down here, Joel, but we're trading near the pre-market lows. So we haven't got down to those levels here yet. Give us a technical here.
You know, I taught you too good because my comment was going to be, you know, sometimes I look at a pre-market chart like in PANW yesterday. Of course, it's a much different stock, right? Palo Alto Networks. And I'm like, man, I don't know. It looks like that pre-market low was in, right? When we were doing the show was here. I can't say that today in Target. We're kind of hanging out here at 143.55. Our pre-market low comes in at 142.15. So, you know, just too close to it. I will say though, you just eyeball this 140 area. And if you want to pick this up, if it's very important for you, that 140 area is also 50% retracement of the move from 100 to 180. Wow, 180 is good resistance there. So you got a couple monthly lows in there. If you really feel like you have to own this thing, maybe you might get it at 138, 142. I would look at that as a potential buy zone area. Coming back on the upside, street leaning right way into the report, right? This thing is really falling off hard. So not shorted in the hold, down $12, but I'd be a cautious buyer here on the downside.
Yeah, I'm not a buyer at all on Target. I haven't liked this stock for a long time, and it's had the big run from 100 to 180, so it's had its move. Now you're kind of in the middle of the whole range.
Yeah.
I could see the 140. If I was short, I'd probably bring it in around that level there, but I don't think I'm coming in here. I think I'd be maybe covering shorts, but no, I'm not going long. Not buying the dip on this one. No AI story, and I just think Walmart is best to breed Costco. We always kind of group Costco, Target, and Walmart. Target's always been a laggard. It's always been the underperformer, I feel like. And, at one point in time, Target was the up-and-comer, and 2020 had the huge move there.
Yeah.
Up from 100 to 250. But really, when you look at it over the course of the last 7 or 8 years, I mean, it's up and it's done okay, but Walmart is just, exploded in that same time period. Straight up, where Target's kind of just choppy and sideways here. So best to breed is Walmart, obviously Costco, and Amazon's here too, still eating all their lunches. So I don't know. I'm just not a big fan of Target.
All right, well, let's keep the earnings train ticking along. We'll go from Target to Lululemon, which also reported earnings yesterday, or was it?
No, I'm sorry. No, Lulu was a shake up in the C-suite. Sorry.
Okay, that's right. So Lulu, let's see. Okay, so we had some analyst ratings coming in after this. So when did they announce this yesterday? Okay, yesterday after the close.
Yeah. Woo.
Let's see. So Lululemon does not intend to replace role of chief product officer. So it looks like, we had a lot of shakeup in the C-suite, and the stock is trading down 3% after this.
Yeah.
Man. Jeffries downgraded the stock yesterday as well. Sorry, I'm just trying to.
It's out of favor. I mean, this stock, they're shaking it up, and it still doesn't even, it goes down on that news. And again, they did lose the chief product officer in this shakeup as well. I don't know. It's just turned. It's turned. It's got a premium multiple it's had for a very long time. And now the stock is out of favor. And they're talking about competition coming. Lots of comparisons to Under Armour, which I don't feel are warranted. I don't feel like this is Under Armour. I don't remember the Under Armour stores ever being as jam-packed as the Lulu stores, but maybe they were. But just you've broken down. We've been in an uptrend in Lululemon since birth, and since the birth of this stock. And it's broken trend here now. And obviously, sometimes best of breed stocks, Lululemon was for a long time, can continue to be. But retail and apparel is always, it's just, it's trendy. So what's hot now 5 years from now isn't the new hot thing. We see that, and it's hard to get these brands that just last, for decades and decades. Nike obviously found their way for a long time, even though the Nike brand has been hurt here lately too. So just competition coming from all over the place here. Premium multiple, you've always paid for it. Why be a hero? Why call the bottom? I don't want to call bottom. I want to start seeing some type of uptrend form again before I try to be a hero here and say, yeah, Lululemon's cheap enough here at 22 times forward earnings. Well, you know what? If the growth is slowing down, 22 times forward earnings for these retailers is not cheap. Retailers can trade down in the teens easily on their multiple if the growth is slowing. So I think you've got to be somewhat cautious here, just saying, yep, the bottom is in.
This stock is down almost 40% since I keep looking at the
Big time.
daily. I mean, that is a haircut. Holy mackerel.
Not a favor.
Made its all-time high on the last trading day of 2023. I'll just give you one monthly level, and then you can do what you want with it. But man, this thing had been breaking down, and the next monthly low was 286.58. I don't think we'll see that today. Maybe psychological 300 number, but oh man, I did not realize that stock. Boy, I sure hope that's not a precursor for the market, man. That's just horrible looking chart there.
And again, Lululemon's not the market at all. And it's
am.
all about, we've seen this with retail stories over the course of my 25-year trading career. What is, the hot new fashionable thing 5 years later is something else. So it's difficult for retailers just to continue to have, to have this brand that everybody has to own for all course of time, and for lack of better words here. So I think you just got to be careful saying, yeah, Lulu is the brand. It's always going to be the brand. I'm going to buy its great brand at this, at this price here, because it just doesn't happen. I mean, people were talking, and I'm not doing the Under Armour comparison, but people have been doing it. I mean, Under Armour was awesome. You think about back, 10 years ago, everybody's talking about Under Armour. It was everything. And the stocks went from what, $50 to $6. So when these brands start to lose their luster, man, they can really get punished. And Under Armour now trades at 13 times earnings. I'm not saying Lulu is going to 13 times earnings, but if they cut that down to even, a 19 or 18 times earnings, be another 40 or 50 point fall. So they've got to find a way to start, obviously getting the brand back and getting, the sales to come back up, because if the growth is slowing, it's a serious issue for Lululemon.
And expensive stuff too, and
so expensive. Like how much of this, and that could be a good point. Maybe this is just, we've talked about the consumer trading down. There's been trade downs. Maybe it's Target to Walmart, because Target's a little bit more money. Maybe, they're not buying the Teslas, they're buying a little bit cheaper cars over at Ford or GM. Maybe they're just not paying as much for the Lululemon, and they're finding cheaper alternatives here. The consumer is starting to do trade downs. We are seeing that, and that is, indicative of a tighter consumer. But it's, the consumer is going to buy iPhone. They want their iPhone. There's certain products that just have to have. Lululemon, $80, $90 pants. I mean, that's a luxury item.
They're more than that. I think they're more than that.
Maybe they're even more. Maybe a couple.
Yeah, it's kind of ironic we talked about Target first, because you said it's Walmart to Target. It could be Lulu to Target. I mean, Target has, yoga pants now that are like made to kind of replicate Lululemon. There's a bunch of other brands out there now, Alo, Viore, that are taking some of Lulu's market share.
Mm-hmm.
But what I will say is I think we're past Lulu being one of these like fad brands. I think at this point it's a staple for a lot of people. Not just women. I know a lot of guys here at the Benzinga office that wear different type of day and stuff like that. So I wouldn't be worried about the staying power of Lulu's brand. The growth is an issue, obviously. But I actually just saw, so I do have some money in a managed account with a guy at Morgan Stanley who does a really good job. And I check the portfolio every once in a while to see what he's doing. And he bought some Lulu last week. So I was trying to figure out what he was seeing that made him I was trying to reverse engineer the trade, be like, all right, maybe he's seeing this in the chart. Maybe he's seeing this in the numbers. I don't know exactly what it is. Maybe I'll have to ask him what his.
A lot of people just like the stock and they think eventually it's going back to all-time highs. And all I'm saying is that sometimes retailers lose their luster and they never revisit those all-time highs. So I'm not saying this is the case for Lululemon, but just be careful saying, well, this brand's going to turn it around, and it has to turn it around, because we have seen so many good retailer stories just, all of a sudden start to lose some luster and never turn it around. So I'm very cautious just randomly calling the bottom in Lululemon.
Got it. Gerald says he was in a Lulu the other day and it was mostly men shopping there. Yeah, I mean, yeah, I hear you. I like I said, I think like you do have to worry about that with certain retailer stocks. I think Lulu has staying power and it'll be around. All right,
And
let's
those are
go
your
to
buyers, Aaron. Those are the people who are actually coming in and buying the stock. And they've been wrong the last couple of months, but maybe they're going to be proven correct. And maybe Lululemon is going to be the brand that turns it around. I mean, it's still what year? When did the stock go public, Joel? Lululemon.
Oh, let me see here. This is the
go back all your
monthly.
data.
I mean, the earliest data I have here is 2007.
Yeah, 2007.
Yeah,
and I mean, we've been straight up for a long time trading a premium multiple.
Do me a favor, everyone watching, and I know we ask you to hit the like every day, but I want you guys to hit the like button right now because I'm trying to see. I think there's an issue with it. Says there's only 61 people watching on YouTube
Something's
right now.
going on. I know. It says there's 61 people watching. Typically, we have 2,000 people watching.
But based on the chat, it looks like there's a lot more than that, and the stream has 78 likes right now. So if the likes go up, above 100 or whatever right now, then I know there's an issue.
I think YouTube's not tracking it correctly here this morning.
Google's mad at us. Google's mad at us. Yep.
Yeah. Okay. See, the likes just went up to 115. So there's got to be more people watching than what YouTube says.
Short Google. That's not a trade. That's not a trade.
It says 58. The number's not right, so we know that.
Pickle Monster says he's not falling for that trick. It's not a trick. There's something going on here. Roll call. Yeah, roll call. Everyone put present in the chat. Yeah.
I saw that too. I was like, whoa, what happened here? We got no viewers all of a sudden. I'm talking to myself.
Everyone was upset with the sports talk.
Yeah, that's what they did. They all left. We didn't even mention the Celtics, Spinner said. So
no, that was crazy. That was
crazy. If it was the Pistons, I'd be talking about it.
All right, let's move on to Urban. We'll go from one mall stock to another. Urban Outfitters reported earnings after the close yesterday, and I mean, similar thing to like Macy's. I guess the mall trade ain't dead yet. Urban Outfitters EPS of 69 cents, beat by 16 cents. Revenue of 1.2 billion, beat by 20 million. The stock was trading up about 10% yesterday afternoon when I was looking at it, but it has since come down. It looks like it got up to around $45 on the nose.
Higher. You talk about some confluence here. Pre-market high. Boy, you would have had to be quick to catch this one. Pre-market or after hours high, I stand corrected, 45.48. And then you had two daily highs back in March, one at 45.69 and one at 45.55. So if you were out there, I will say I don't think it's going back to that level. Backed off $3, and I won't use my pizza sales joke this quarter about how their pizza sales went.
Well, that means we get to use it next quarter, so we'll keep that in the back pocket. Dennis, you got any thoughts here on Urban?
It's given back the gains. It's a stock that obviously has had a very good couple of years. That and Abercrombie, these two retailers have outperformed all the other ones, I feel like, lately. But again, we've broken trend here now to a certain extent. We were going up. Now we're kind of just pausing a bit. I don't think it's ever good when a stock goes up, over, 10, 12% and then gives most of it back. A lot of times people say, well, if it's now, it's going to go right back up there. Usually not, because you create a whole bunch of after hours bag holders. So I'm actually would be a seller of this stock here just off the after hours trading action. I don't like that action. I think it's a stock that can actually go red.
Must hold 42. That was the top of yesterday's range. Actually, a pair of highs from Monday and Tuesday at that area. So let's see if 42 holds. What was the was it Elliott yesterday? He bought something, or was it the day before? And the thing was trading up in the pre-market big time.
What stock was it? The Elliott. We talked about it too, but my 6-second goldfish memory. I can't even remember.
Help me out, chat.
What was it? Or chat. What was the stock Elliott bought 2 days ago? We did mention it.
I know I'm forgetting too.
Chat will have it. JCI, Spinner's all over it. Yeah, it was JCI.
Yeah.
And that was trading way up. And actually, it did close pretty high, Joel. It held on to it pretty good. It came back in.
I looked
gave it back, and then it came back. So, sometimes these things do that. They do buy Elliott dips, though. When Elliott's in something, then they buy the dippers.
Well, actually, the Elliott pop was Monday. and that you hit the 72.99, and then you came back into 70, and then it rallied yesterday. So it was on Monday that it was the fade, but it came right back on Tuesday. Quick question here:
You
Joel
know which
used.
other stock did that before you go on is LRCX yesterday. I had the
Ooh, yeah.
buyback. Yeah, I had the big buyback. Obviously, the $10 billion buyback. And what else did they do? They did something else too. There was two things they did. Holy man, our
Um,
memories are shot.
no, I know,
The
I
$10
know.
billion buyback. I gotta look at my notes from
Split,
yesterday.
split, split,
Oh yeah,
split.
the 10-for-1 stock split. So big stock split. They did all that. Stock was trading at $9.95 in the pre-market. Joel, that thing opened at $9.65 and then gave it all back. It filled the gap entirely. It went red.
I
It went
know.
red on the day. How do you announce a 10-for-1 stock split, a huge buyback, and then trade red? That was a gift because that stock got bought at 940. I believe the low there was 942, and it got
Oh,
941.83. And it got bought, and it's all the way back up to 970 the next day. So, I mean, when you have great news like that, with stock splits, and obviously stock splits, aren't that meaningful, but, you tend to buy them on them. And, the buybacks, and then it gives the 40-point rally entirely back. Maybe that was the opportunity, is to look at news like that and buy it, as opposed to like trying to buy off an earnings report. But wow, it's right back up here at 971. So you're instantly up 30 points on that if you were buying the dip on LRCX.
you know what also gave a lot back, and this is going back to look at Chubb.
The
See,
Warren buy didn't
yeah,
hold. And we've
yep.
talked about that too, not chasing Warren. We typically see, people in algos will chase the Warren Buffetts, and it got way overdone. It was up almost 10%. Chubb's an insurance company, folks. It's not an AI play. It's not something like that's game-changing technology here. It's an insurance company. So when they're moving 10% because Warren Buffett bought some shares, I mean, maybe a little bit overdone. So not surprising that one gave it back.
Answering a quick question, AB, I'll let you move us along. Does Joel use post or just pre-market highs? I had the 15-minute. I like to use both, because when I go to the 30-minute chart here, the reason I have the 30 is it incorporates both the after hours and pre-market trading. So I look at both, because sometimes you have your earnings after hours, sometimes they're in the morning. So if it happens after 4 o'clock and before 9:30, boom, well, we're done at 9. That's what I look at. I just want to answer T's trades question on that.
All right, let's go. Let's move away from earnings for a second. Go to the analyst ratings world. Yesterday, I did
BuzzFeed.
All right, let's go to
We got to
BuzzFeed
do
real quick. So,
BuzzFeed. Yep.
BuzzFeed trading higher this morning by like 56%. Wow, after Vivek Ramaswamy, the former presidential candidate, I think he dropped out of the race, right? I mean,
Correct.
he was in the race for a while, running as a Republican, dropped out. He's been an investor for a while. I know he made his money originally through some like biotech stuff, I believe. But now
ROIV is the stock.
yeah, and now he have announced a 7.7% activist stake in BuzzFeed. So this is interesting because I think BuzzFeed typically has a reputation of being a more like left-leaning media outlet. And now you got Vivek Ramaswamy coming in buying about a 7.5% activist stake. And the stock's trading up 58% on this news. So he's already up a decent amount on the well, we don't know exactly when he buy because it was we got it via a filing, 13F filing. But either way, I mean, big pop in BuzzFeed this morning off of this news.
I think this was a memester stock at one time too. Like this was actually one that got a little bit of love, even with the GME 2 weeks ago there when the GME had the big pop. BuzzFeed got a little bit of life there too. So I get the memesters grabbing a hold of a headline like this, and this company reported earnings I think last week as well. This has been in the news a little bit, but I mean, you go back to 2023, it's some crazy moves in this stock here too. So it is prone to having these little short squeezes or crazy moves here. Not surprising the memesters grab a hold of a headline like this.
I mean, they're pressing it. They're pressing it on good volume. I don't know what he's planning on doing with it. I would just, if you want this thing, you got to get right now. The pre-market high stands at 420. So, you want to get above that and keep on going. You haven't seen $5 since April of last year. So if you want another target in the 4 handle, 492. But keep an eye on that pre-market high. It's one of those moves where you open up like, oh, I gotta buy, and then boom, it just finds nothing but sellers. People that have big positions, no idea about the news, and then it comes out, but leaking a little bit off that pre-market high.
Yeah, other news kind of in the similar light in the presidential race. You had RFK buying GameStop yesterday. And as Juan Carlos is pointing out, you had Trump announcing he's taking crypto donations now too. And it's not just, Bitcoin, Ethereum. The Trump campaign said they're taking everything, whether you got Shiba Inu, Dogecoin, etc. They're willing to take it. So that's, that could be interesting. I mean, hey, if a bunch of people donate in crypto, and crypto rallies, then you got, more money than you did. But if crypto falls, then it's not looking like a smart move. So, interesting to see some financial news coming out of the presidential candidates and former presidential candidate yesterday. But, I don't know if RFK's got that roaring kitty type Midas touch for GameStop and going to be able to lift it up today. But that was interesting. First Solar, someone brought up in the chat. I wanted to talk about that, which had a great day yesterday after 2 big upgrades. We've talked about, solar stocks kind of underperforming, but First Solar closing up 8% yesterday after both Piper Sandler came in with a new $219 price target. And that was followed up by a $270 price target by UBS. So what I think happened was this UBS analyst, John Wyndham, was working on this report. Oh, I love this stock. I can't wait to put this out. And then he sees Piper puts one out and he's like, oh God, I got to put mine out too. But with a way higher price target, he's not going to be outdone by Piper Sandler. So comes in with a 270 less than an hour after Piper Sandler announces theirs. Stock again gets a huge pop yesterday, closes up 8%.
It just goes to show you got to buy best of breed stocks, because you can buy the laggards and say the laggard trade ENPH is going to catch up, SEDG is going to catch up. No, you go with the best of breed. First Solar has been the best of breed for a very long time here. It started as the best of breed, and then for a while they were trading Solar Edge and ENPH. Not anymore. I mean, Solar Edge seemingly goes down every single day. It's at new 52-week lows here right now. And there's First Solar now, not far from all-time
highs.
You want to invest. You could trade anything, but you want to be an investor. Identify the best of breed stocks in the best sectors, or the sectors that you want to own, and buy those stocks, best of breed. And First Solar is definitely best of breed. I cannot believe this solar stock is going to try to make new highs here. At least, I didn't go back more than 10 years, but new 10-year highs here. Absolutely incredible comeback in a sector that is in shambles. Wow. Management needs to be applauded here.
I will just say, caution in the wind. You know me. 213.43 was your August high last year. You got to 212.37 in yesterday's session. So if you've been hanging on since the middle of last year, keep an eye. We'll call it 213 to make it easy for you. Big monthly move in this thing, and really, wow, 176 to 212. So congratulations to the First Solar shareholders. SPWR, did that come back in? Yeah.
So what I think part of it is that you have First Solar, from what I understand, doesn't do much with residential solar panels.
Sure.
And that's what, a lot of these other companies are trying to do. Sunrun, for example, is a big residential solar panel play. And I don't think people really want solar panels on their houses that much, but First Solar does it for, more industrial and utility projects and stuff. So, I think a slightly different business model really helping First Solar out, whereas these other companies are struggling. What about Array? How's Array doing? ARRY. I haven't looked at that one in a while.
Huh. No.
Same thing. The whole solar, let's look at TAN and it'll tell you a story here. I mean, TAN's $42, cannot even get a sniff. We've been in this huge rally here for 6 months. TAN hasn't moved at all. Nothing. We went in 2020 from 20 to 120. We're all the way back at 42. We're down 75% from the highs. This is diversified. And it probably has some First Solar in there too. Imagine it didn't have, maybe it doesn't, but imagine if it didn't have any, there's been one stock one stock in the solar sector that has been okay. All the other ones have just been crap. Canadian Solar too. Somebody just mentioned that. SunPower has been an epic disaster and looks like it's going to go out of business. Just a sector that needs lower rates. And until we start seeing a path to lowering rates for the Fed here, the sector remains in shambles. But I tell you, First Solar's figured it out.
All right, we do have another earnings report to go to. Let's go to Toll Brothers, see how the home builders are doing. Conference call in progress. So we're giving you some live updates here on Toll Brothers, but the earnings actually came yesterday after the close. EPS came in at $3.38, missed by 77 cents. Revenue of $2.84 billion, beat by 180 million. Let's see. Trying to see what's bringing the stock lower. They had to give some like weak guidance or something. Okay, yeah. So Toll Brothers now expects EPS of $14. The estimate was $13.65, so that was up from the prior outlook. But maybe the market was just looking for a little bit more because we did leak a little bit on this report.
Go, Joel.
High expectations, right? A nice run up in the stock. It's coming down. I mean, this is what the stock does. It has big reversals a lot of times off its pre-market action. The only thing I can identify for our traders is this 128 area is potential support. 127.55 fills the gap. So very important to hold that area. Once again, they're on the higher end of the housing market, so they're holding up pretty well. Continued strength, but important for if this loses that 128, I see some room on the downside. Coming back up, look at the mark now. The mark at 130.22. The traders will be looking to get out at that level, but holding up so well. Can't argue with the last price action. Just people getting a little nervous here. Down market as well.
The home builders are the hardest things to trade because they'll blow it away. They'll be up on the algos and then it'll give it all back, or they'll miss earnings or something will happen. They're light on something. They'll hit the stocks and they'll buy them all the way back. The fade trade is usually the play in the home builders, but they're really tough to trade. So, I mean, they're unpredictable. And again, I think in this case, they just don't trade a lot after hours either. So you get the real volume coming in. And sometimes there's a difference of opinion from where a stock was trading after hours to where a stock is going to trade in the regular session.
Well, I was looking at this VRT chart again. It's up over 500%.
Holy, I screwed this one up. I bought this at 62 in the long-term portfolio, sold it at 72, went up to 80. I rebought it, and then I got out again too soon. Was in it a couple times in the long-term portfolio. And you just get these storied stocks that are at reasonable valuations, and you've just got to hold on. And, here it is, $100. I'm like, why in the hell did I sell that back in like the 70s? So, we identified it. Christian Fromhertz brought that to us, on this show. Multiple people brought that to us. But, Christian was saying it back when it was 62. And I was like, I like the call too. It had the dip, gave us the opportunity to get in it. It's obviously, data center play with AI. And, and all of a sudden it's got, an SMCI. We know what it did. Sometimes when you got a story, you just got to hold through all the crap and all the little pullbacks. And there were some vicious little pullbacks in this thing. But, sometimes buy and hold just works.
The thing behind the thing, right? Right?
Yeah, that's what Raz always said, and the thing behind the thing. And he's correct here too. I mean, you got data centers running. You've got, multiple plays, different AI plays. But as soon as CNBC starts gravitating and talking about this as an AI play, sometimes you get, some sustainability here for the next few months here. And that's what we've seen happen.
Well, and the data center trade and copper are kind of going hand in hand. I mean, you look at SCCO, Southern Copper, that's also trading at 52-week highs here, and copper's just had an incredible breakout.
Yes,
like all these things, the data centers, the copper, you need the copper for the data centers. Like this is all part of what you need. I'm ready to deem VRT the greatest blank of all time. Someone in the chat might guess it, or you guys might guess it, but the greatest blank of all time. There's probably a couple other out there that might be able to compete with it, but right now for me, this is
the greatest stock. I don't know.
No. Close.
Dennis, you following the kid?
He's calling it the greatest something of all time.
Yeah, I was trying to think of an acronym like GOAT, but I couldn't throw this other one in there.
I don't know.
I was gonna give the chat like 20 more seconds to try to guess it because it's there's a slight delay. All right, I'll just give it to you guys. The greatest SPAC of all time. This is the only.
Oh, is it a SPAC? Was it a SPAC?
Oh no.
Well, I see it trade. It was trading at $10.
I did not know that.
It was trading.
I did not know that.
$10 for in 2019.
Good call.
This was a SPAC, eh? Wow. You know what? DKNG was a good one too. But
All right.
yeah.
In the
You
running,
know what?
we'll have a good.
I think AB's onto something here. You might be able to call that. Yeah, boom.
We'll have a running competition between DraftKings, VRT. What about that?
What are the other good ones? Chad,
LA
give us some good SPACs from SPAC back from SPAC Attack, because most of them didn't do
And
that
that
great,
segment
but
is now over.
Yeah.
we had a show.
Yeah.
Catchy killed it though. Love Chris Catchy, and Money Mitch was obviously on that as well. Catchy killed it. SPACs were hot for a long time. Like NFTs were hot for a long time too. Remember the NFT craze?
Yeah.
That never made any sense. And the SPACs were just, Wall Street ruins everything. There's a few good ones. And then they're like, oh, we can SPAC anything. We'll just SPAC this and we'll SPAC that. And we'll just SPAC a bunch of crap and sell it to Wall Street. And, they find a way to ruin everything. But,
all right,
I brought
us off track. It is 8:37. Time to bring our esteemed guest on of today. We do have Ryan Craver, going to talk some retail earnings with Ryan. Without further ado, let's give him our very special pre-market prep. Welcome.
Ryan Craver, Commerce Canal, joining us here on Pre-Market Prep, and this is your favorite time of the year, retail earnings season.
Let's go. Retail earnings coming in hot and heavy. We got some Target this morning that I don't think it was much of a surprise to any of us, right? We've been talking negatively about Target for a while now.
So thoughts on the report? You get the big fall off here. I mean, Walmart continues. We were just arguing Walmart best of breed continues to perform, making new all-time highs basically. And then you have Target. Maybe Walmart raised the bar too high for Target here, but wow, they always find a way, it seems like, under the bar. Last quarter they did good though, and they rallied the stock up. Now they give that all back, coming back down here. Is this a value play here, Ryan, or is this something you just stay away from?
So Target arguably has been a value play relative to Walmart for years now. I think the numbers that came in, a couple things to point out, they were negative, right? So we're not growing sales. Second thing is I've always called Target a department store masquerading as a mass market store. It only has 20 to 25% of their sales being driven through grocery. And Walmart, on the other hand, has 60 to 65% of their sales being driven by grocery. We all know that grocery is where we've got the foodflation happening. So it's a lot stronger retailer. Target also doesn't have the strong narrative around e-commerce and advertising that Walmart does. So the only way I think you play Target at this point in time, and I think I said this a couple calls ago, is if there is some sort of activist shareholder play that would potentially call for Brian Cornell's head. That's kind of the only way I think we would potentially play it. I said that several calls ago. I don't think it's going to happen anytime soon, but if we start to see it trading down to, much lower, I would anticipate that someone's going to give it a go.
Ryan's right. You get these storied stocks that, go into the gutter, and they need that vote of confidence to really turn them around. Like if you were to get an Elliott or somebody else in there, that can give a vote of confidence to turn the stories around. But it seems like when they, when they're just drifting down and people aren't interested, that these things can go down a lot lower than you think. I mean, and maybe we should go to Lululemon here because this kind of falls into the same category here where it was such a good, strong brand for so long. And the last year or so, the brand's starting to get tarnished. Competition is coming here. They do this, shake up here yesterday, and investors are just selling the stock again here. Ryan, thoughts on Lululemon's shakeup?
You're right. You're totally right. So I think if you just step back and you look at the actual numbers, the numbers aren't that bad. So yes, they were growing 20+% year over year a couple quarters ago. They're still in that 14, 15%. They still have positive comps, right? But the narrative has clearly shifted on Wall Street to say, hey, they have way too much competitors, and Vuori, Alo, They've got some of the private label brands of Nordstrom, Dillard's, et cetera, that are pushing some of their athleisure. They've got headwinds on the perception that fashion has changed. And it's no longer about tight leggings. It's about baggy clothing. So the narrative clearly changed, but the numbers aren't that bad. With that said, it's getting hammered, right? And probably the next support spot is around 260-ish if it holds, and then below that it's in the 180. So I would not pick it up at this point in time. However, I also wouldn't call this, as negative as it's showing. Do keep in mind that Lulu continues to grow their international. It's just small as a base. Do keep in mind that as Ozempic and all the GLP-1s continue to push, we are probably going to see a shift back into the apparel, and we're going to see a lot of people swapping out their closets for their new fashion. So I do think that it's still a good story overall. It's just that it's got some very negative sentiment today, and I'd wait till it bases to pick up a position.
As everybody gets their new bods, they're going to want to show them off in Lululemon clothing, Ryan?
Not to mention that they're going to, even if they just want to buy all the same clothes, they're going to need new clothes because they're not going to fit in their clothes anymore.
Exactly. And that's all about the closet swap. So the closet swap is going to trade down. I think there's going to be a major impact to a number of retailers that are focused on this segment. I think we're going to see it impact all the PVHs and the Old Navies and everyone eventually. I don't think we're at that catalyst yet, although we believe that everyone is currently on GLPs, but I think it's going to be, coming in a couple of years' time.
It's just going to be more and more until, we'll see. But what about Ryan right now with like the fast fashion brands, Shein? You have, people ordering stuff off the TikTok shop. Has that still been as hot as it was the past couple of years, or are consumers starting to shift their habits away from those?
Yes, we have seen some news from Shein potentially going to do the London-based IPO. We have seen that PDD, their Temu, has supposedly pulled back a little bit from the US and how much they've been pushing post Super Bowl last year. Look, the apps are still number one in the stores, number one and number two in the Google Play stores for shopping, in the Apple app stores. I think that Pinduoduo is going to continue to try and push this Temu as far as they possibly can, unlike what Alibaba did to ditch their product. So I think it continues to remain hot. I think the interesting thing on the TikTok side of the business is we saw that they've now got the layoff news that's come out recently. But in terms of overall shopping, TikTok shop it's small relative to Temu and Shein.
Ryan, I just want to backtrack here for a second. We've had John for like a long time. We really haven't discussed like your company, Commerce Canal, and what you do. And the reason I like to follow you and talk to you about the retail market is like you're in the nitty gritty, right? Of these advertisers, of the marketing. You see what's hot, you see what's not. So just a two-part question. Just explain, Commerce Canal a little bit, the data that you're looking at. And also, the consumers is, just overall is, the consumer starting to get a little bit stretched. So there's two big ones for you.
Yeah. So Commerce Canal, we go to a brand and we help them sell online. So we tell them where they should be selling, how they should be selling, and how they should be marketing their product. So we see all of their sales via Amazon, all of their sales via Walmart, any sales to other third-party retailers, whether it's Macy's, Kohl's, etc. As part of that, we also see all the advertising data. So we'll see how much we're going to be spending on Google, Meta, Pinterest, TikTok, you name it. And it gives us what I like to call a God view of where the current consumer is. I think that Andy Jassy, when he came out about a month ago on CNBC and said that we do see some trading down, is pretty similar to what we're seeing in all of our data. So they're still buying. There is still ample credit card room. There's still household savings that is still there. But they are trading down. So they may have bought a premium brand previously, and now they're potentially buying a mid-tier brand. So sales are still growing. It's just that they aren't buying the highest price item. That would lead to, okay, where are the sales going? The sales are going to the largest behemoth in e-commerce, which is Amazon, of course, currently having about 40% share. I'm still bullish on them. I think the flywheel continues to turn. I think that they have a great narrative with Wall Street, with the layoffs, the continued push to services, and then the doubling down internationally. And then there's the pocket of off-price retailers, Burlington, Ross, TJ Maxx. All of those are currently sitting in a nice little base. And I think that if you have to play in retail, back to what Dennis said, play the best of breed. The best of breed is off-price, e-commerce, and then if you forcefully want to get into department stores, the only name I've got for you that I would potentially look at is Dennis's favorite, which is Dillard's.
I'm telling you, man, I cannot figure this one out, but theirs is the stock that has figured everything out. Is it all buybacks? Is it just buybacks and just drive price and there's no shares out there? And that's why this thing, I've never been able to figure out how this is different than Macy's and Nordstrom's when I go into those stores, but the stock is way different. The stock just goes up.
You're right. So it's definitely buybacks is one part. Second part is they're just solid operators. You go into a store, does it ever look in disarray? No. It's set up well, it's merchandised well. And then number three, which is probably something unconventional, they haven't fallen in love with e-commerce. They have never fallen in love with e-commerce. They don't push it hard. They don't require their vendors to sell on e-com. They haven't fallen in love with the terrible margins of e-commerce, which if you can pull that off, you can certainly see it in the numbers. They're not putting up numbers like, Lululemon close to 60% gross margins, but they're also not putting up lower numbers like 35 to 40 of Macy's. So great operators.
Ryan, one thing I feel like I've noticed over the past couple of years, just in terms of like how younger people are spending money, is I feel like a lot of like vintage clothing and even some like secondhand clothing has kind of made its way back. Are there any plays, like is eBay, going to benefit from people looking for older clothes? Is there like I don't think Depop or anything is publicly traded, but have you noticed that as well?
Fantastic question. And I'm shocked this has never come up. The name I love here, which arguably is probably close to monopoly in this world, is Winmark.
Okay.
Winmark, WINA. I'm talking my own book. I've held them for a long time. But this is the player. Secondhand. Beyond that, a lot of it is mom and pop shops. So it's hard to have a public position in them.
Got it. So people go into actual thrift stores and like buying their vintage, trying to find like a vintage Patagonia coat versus going to eBay or Etsy or something and trying to buy them there.
Yeah, eBay. So eBay, to Dennis's point, is kind of like the story of Dillard's, but of e-commerce, right? So they continue to shed assets, sell that stuff off, gain additional capital, and then use it for dividend buybacks. I think eBay's interesting. The only thing is the United States in terms of users is declining quite rapidly, and then they're seeing continued strength in Germany, which is their largest market. But it's definitely something that's only going to drive as high as they do dividend reinvestments because they really aren't growing.
Got it. Any other, like, I guess, just interesting trends you're seeing right now with how people are spending their money online, or any e-commerce plays that, you don't think are getting talked about enough?
I mean, I would stay away from Shopify until we see some better narrative from them. I think Meta.
Goldman upgrades that today, Ryan. So you're fading Goldman on this? Yeah.
I saw that. I mean, I don't believe in the story just yet. I think that they need to change the narrative a little bit. I'm still a big believer in Zuck. not him personally because of his changes, but more so because just money continues to flow there. It's the one spot that people are pulling from Google and putting continued advertising into. And then I think the last time we spoke, the big push was on Groupon.
Oh yeah. What are your thoughts on Groupon here? I mean, stocks come back quite a ways here. I mean, and again, the memesters kind of kickstarted this thing with GME there just going back, a week and a half ago there, but it hasn't given anything back. It's just going. What are your thoughts on Groupon? Is this a turnaround story, or is this just the memesters holding it up?
Turnaround story remains. If you take a look at the latest earnings, I mean, it's just quarter over quarter over quarter. This management team knows what they're doing. I think they're focused in the right places, and they're speaking to the right metrics to turn around the business. I think it remains. I think keep going. If it takes out that 19 area, I think it's off to the races.
We've talked about this one a lot. He actually, when I was on vacation, he talked me into this one and been riding the ups and downs. I really thought the memester move in this, it was going to give it back, and it hasn't. So if it could fill that gap above 18 and get going, but just fitting your narrative about the lower prices. I mean, is dollar stores, Dollar General, Dollar Tree? I mean, are we going to be looking at that area if people are trading down? I mean, the Dollar Tree, that chart looks horrible. How does that fit in your Meredith?
I think this Dollar Tree, Dollar General, Five Below, I think all of them, they were the story of about 2 years ago. Build stores, show comp increases, and they were doing it well. Now they really don't have the growth, and arguably they're overstored. So I think it's a tough area to be in right now. I would probably steer clear until we see some, renewed results or a change in narrative.
Okay. Anything else? You got anything else, AB?
No, I was just going to thank Ryan for coming on the show this morning. It's always great to catch up on the e-commerce trends and hear what Ryan has to say. All right, Ryan.
Thank you.
Have a great rest of your Wednesday. We'll chat with you soon. Thank you.
Thanks, Ryan.
All right, guys, that was Ryan Craver from Commerce Canal. Always great to catch up with Ryan here during retail earnings. We've got about 7 minutes left. Let's see what we've missed today.
You've got like a little bit of separation here happening here today where you're seeing, Target obviously is hurting retail to a certain extent. The dollar stores are Chad pointing out are getting hit. Dollar Tree is set to report earnings on Thursday. It's trading down. Dollar General is trading down. Target's putting a little hit on some of the retail stocks here this morning. But then you've also got, tech continues to rally. NVIDIA has turned green. I mean, they bought that, Amazon headline yesterday. They said Amazon wasn't ordering any more chips because they were waiting for Blackwell or whatever the hell. And then, all of a sudden Amazon comes out intraday and says, no, that's not true. None of that is true, that story. And, stock pops back up. So it's getting bought ahead of the report here, predictably, because we call that move off and that they usually show strength ahead of the report. And I mean, AMD's trading higher, Qualcomm, Applied Materials, Micron, dip got bought yesterday here. Everybody's just waiting for this NVIDIA report here. But people are obviously positioning in chips ahead of it.
All-time high, that's the only thing I could give you, is 974. It looks like you have someone wiggling out here a little bit. I'm not, well, it's actually broke above here. So if this stays above the 954, that was the top of yesterday's range, and look for a press higher under 954. The closing price was right there too. So I think we're looking at like an $80-$90 move in this thing. I think it was 8% yesterday. So for you straddle buyers or sellers, that's what they're looking at for NVIDIA. But the street awaits the biggest earnings report, definitely, of the quarter.
Other news that I saw, we talked so much about inflation over the past couple of years, and now it seems like at least some companies are trying to reverse the trend. There is news that McDonald's is going to be offering a $5 meal. Dennis, I know you're going to love that because we've talked too much about how, McDonald's inflation has gotten out of control. But starting in June, McDonald's will offer a $5 meal that comes with a McDouble, 4-piece chicken McNuggets, fries, and a drink. So it sounds like
good meal.
They're trying to replicate kind of the Wendy's biggie bag there that they've got over there. And then Wendy's announced they're going to do a $3 breakfast meal. I didn't see the details of what comes in there.
They listen to PreMarket Prep, AB. We've been complaining about McDonald's pricing here for a month, and all of a sudden now they're listening to our show. They're coming in here, obviously, and giving us some, cheaper food. They need to figure it out because, like I said, you can't be going to McDonald's and spending $30-$40, on a four people, with two parents and 2 kids. They're going to go to a sit-down restaurant at that. So you're going to have the trade-up happen. So they got to figure it out. And I think that's why the share price has been struggling. It's sitting near 52-week lows, or at least near 2024 lows. The prices are crazy. So, that's a step in the right direction. Start offering us an actual value menu as opposed to just trying to rip us off.
Yeah, and then so the Wendy's one, the $3 breakfast, I'm looking at an article right now. The deal will include a small portion of seasoned potatoes and a choice of either a bacon, egg, and cheese English muffin or a sausage, egg, and cheese English muffin. So I guess no coffee with that, but hey, for $3, can't get too picky there. So I don't know. I mean, I'm just curious to know, I guess right now, is this out of like pressure that sales are down, that they need to attract more consumers that are being tighter with their spending? Because if so, like McDonald's is kind of on the front line there. McDonald's would probably know a lot better than a lot of other companies, if consumers are pulling back and spending. And so if that's the case, then it could be good news for inflation, but on the flip side, bad news for, how the economy's doing.
I don't think they're just doing this, out of, courtesy for,
right.
Everyone here. I think they're doing it because they realize that what I've just said is, at a certain point in time where consumers will trade up and stop going to McDonald's and go to like a nice little sit down restaurant if it's going to cost the same price. You go to, you obviously go out of there because quick service, you're in a hurry, but some people go there because it's cheaper. It's a cheaper meal to go to. I mean, if you're not cheaper than a sit-down casual meal, then it doesn't make sense for those people. The people who are, in a hurry are always going to go to McDonald's. There's always people at McDonald's. I'm not saying people are boycotting and never going to go there again. But, all it takes is 5% of people to say, hey, why am I going to go sit down or go through McDonald's and sit down there and, it's kid land and, this crazy environment when I go have a nice meal for the same price, at a quick casual restaurant. So that's what I'm saying is I think you're losing some of those customers, and I think McDonald's knows it, and they're trying to bring the prices back down so that they are cheaper than some of the sit-down competition.
100%. Any technical thoughts here, Joel?
A slight leak going on here. I gave you you mean the McDonald's here? Okay, we won't. McDonald's is just sitting on the low of the move here. So if you're trying to sing from the long side, 262.63 has been the recent low of the move. Not much there. I just looked at the Wendy's chart. That's had a really bad month of May there. So that's not looking too good. We're in the final minute here.
The prices, man. So Wendy's, the kid, I complained about this. We've been picking on McDonald's, but let's pick on Wendy's for a second. Wendy's in Canada is an absolute mess. The prices are nuts. So my kid goes in there and orders he's into salads now, Caesar salad. He's 9 years old. He gets a chicken Caesar salad. It was $16
No way.
Caesar salad in Wendy's Canada. So it's like $12 US. But I'm like, look at it, and it looks like it literally looks like something you'd buy, from a grocery store. Like, and it literally looks like it came from the grocery store that you're picking up these little salads for like $5. So I have no idea what they're doing on that. But that was absolutely ridiculous. The only time, and I do like Wendy's burgers and stuff, the only time I go there is if I got coupons. Because if you go there without the coupons, it's way too much money. So I don't know if it's the same in the States, but Italian Canada, Wendy's is too expensive without coupons.
That's incredible. Yeah. I mean, there's got to be other places to get a better chicken Caesar salad than from Wendy's.
Marshall saying the Dave's double combo ran him $17.75.
Someone
yes,
said someone was saying
this
that. What
week.
about the Chipotle TikTok nonsense? But I'm not really on TikTok, so I didn't see.
No, I don't know about that.
Bob B, let me know what you were talking about because I'm curious.
Wendy's too much money.
Yeah,
The
Wendy's.
fast food restaurants are a little bit too much. And I don't know, it's probably food pricing, labor costs, like that are squeezing their margins to a certain extent. And they're trying to pass it on to the consumer. But at a certain point in time, the consumers are going to say, no, thank you. So you have to be, they're in a tough spot. I don't think I want to own any fast food restaurants right now because they're still in a tough spot. When they're cutting prices and giving better value deals, they got a few issues going on.
Look at
right.
CMG though, man. Look at that.
That's different though, Joel. CMG is the trade up. I mean, you go into a Chipotle, it doesn't feel like a McDonald's. It feels like a quick casual restaurant. That's what I would trade up to if I was like going to, McDonald's. Why not go to Chipotle? It's a little bit nicer meal. So I don't think they're in that spot where, like a Wendy's or a McDonald's. A&W is another one in Canada, is not publicly traded. I don't know if you have those in the States still. But there's just, the fast food restaurants are getting margin squeezed on both sides. Chipotle feels like it's different. Like, again, just different type of meal. So I don't put it in the same category, but Chipotle's been a monster.
Who owns Tim Hortons now?
Who
owns Tim Hortons now?
I don't know. I think they spun it back off and it went private again. It went public and then it got bought. Maybe somebody did buy them. I don't even remember. It's hard to keep track of because they were private, then they went public and they were trading under THI and then they took it back private and then somebody else bought it. So I can't figure it out. So if somebody owns them, I don't remember. Chat probably knows.
It says parent organizations on Google: Wendy's, Restaurant Brands International. So
that's who had Tim Hortons originally. And then they spun it off and it went public. It was always Wendy's owned Tim Hortons. You haven't seen all like the service centers cans where Wendy's Tim Hortons. But they spun it off. And then, I know somebody else bought them or if they went fully private on their own. Some Brazil company, JJ saying, bought them. So Wendy's no longer owns them, I don't think. I don't think Wendy's was the one that rebought them.
Well,
but yeah, they originally came from Wendy's.
It is 9.
Restaurant Brands is Chris. Chris is saying Restaurant Brands owns them.
I think he's right.
Maybe they did.
What's that? RBI or what's the symbol on that?
No,
it's not RBI. What is it? Restaurant RB? Rhythm and Blues? No, I'm striking out on that one. I don't have it. Okay, all right. We're gonna talk to Mr. Jenkins tomorrow.
QSR.
Oh, QSR. I knew it was a funky.
Sorry, I wasn't paying attention. QSR.
Yeah.
Who are we talking to tomorrow? Chaikin?
Mr. Chaikin, and it's going to be good. We have Fed minutes today, so 2 o'clock. Have your head on a swivel.
It could be market moving for the IWM.
Yep, IWM. Of course, you got NVIDIA earnings after the close. The market is awaiting the NVIDIA earnings. Just technically, some days the levels are good, some days the levels are great. Well, the levels are great today. You got a triple top at that all-time high, just under 53.50. And they bought the dip yesterday. You got a pair of lows down at 53.23 area. I think we're just going to grind today and just wait for NVIDIA and get your popcorn, get you ready after the close. And we'll have a lot to talk about tomorrow. Thanks for joining us today.
All right, guys, please smash the like. We do have live trading starting up right now. Join us 8 a.m. tomorrow. Catch up with Mark Chaikin. We'll see you guys there.